Hey, how's it going? I hope all of you are having a nice day, evening, or night. Today's video is specifically for students because, in my experience, I feel this is the group that has the most questions. They are new to Canada and they're always, eager on receiving a refund when they file taxes because that's what the norm has been set among through the grapevine or through their peers where they see everyone's getting a refund. But I'm here just to kind of explain a few key concepts before, a wrong expectation has been set in the minds of students. So let's quickly dive into like six main topics that I want to kind of go through as students and the life of, every student kind of goes through this in Canada. And let's see if, this video may help you take informed decisions. So the first one is, I am a student, will I get a big refund? My simple answer is no. Just because you are a student, it does not mean that you will get a refund. So say if you have like self-employed income like Uber, there's no income tax that's deducted on Uber, and you might end up actually owing the government at the end of the year. So even if you have like multiple jobs and tax has not been deducted correctly on any of the job, you might end up actually owing the government at the end of the year. So just because you're a student, that does not automatically qualify you for a refund. That's a very, very wrong misconception. So yeah, again, my answer is no. Just because you're a student, that doesn't mean you will get a refund. We'll have to analyze it a bit deeper. So the second counter argument that students come up with, but hey, I've paid my tuition fee. Shouldn't I get a big refund? So, okay, it's good that you're questioning. And I would also like to add, like, just because you've paid your fees, that again doesn't entitle you to a refund. We'll do it with live examples, but the concept is that you only get 15% of your tuition back, which is set off against a federal tax payable. Now, I'm sure most of you might be very confused with what does that mean. But for that, you need to understand a few concepts about basic tax credits. Basic tax credits means up to $15,000. There is no tax in Canada, right? So there's no federal tax in Canada. So let's go through an example and maybe you'll understand better. So let's do an example of a student who's going to the best college ever. Okay, the student has paid $10,000 fee. Okay, and look at the numbers on the left over here of my screen. So okay, $10,000 fee, but the student has not done any job in the previous year. They have just stayed at home and not done anything. So okay, so would they get a refund? The answer is no, because they don't have a federal tax payable. Okay, when will they have a federal tax payable? When they start making money above $15,000, that's when you will see, them having a federal tax payable. Huh. Is it confusing? Don't worry. Let's kind of change the numbers. You'll get a flavor of what I'm saying. So let's see employment income, right? This is your T4. Let's say I earn $12,000. Just to keep it under the $15,000, let's see what happens. Will I still get a refund? The answer is again no. But let's just validate on the left. You see, the total income is $12,000, but there's no refund. Interesting. Say now, when the person is working and during the year there's tax also being deducted on the student's salary. Say during the year there was $350 that was deducted. What happens? Let's look at it over here on the left. Awesome. So you see, $350, the student is actually getting back as a refund. Because again, as I said, up to $15,000, there's no federal tax payable. So whatever was deducted, the student will get it back. For this example, we are assuming that EIN, CPP, and everything is zero. I'm just purely focusing on the income tax portion. Okay, now let's do another exercise. Let's kind of take off the tuition fee. Okay, let's take off the tuition fee and see whether that impacts the refund. And my answer will be no. It will not impact. Yeah, because you see, up to $15,000, anyways, there is no tax payable. So whatever tax the was deducted, the student is getting all of the $350 back. Okay, let's try and increase the income. So from 12, now the person is going to $25,000. Now let's see what happens. $25,000. Let's say the person's income tax deducted was slightly higher at say $750, just for example. I'm just giving you an example. This is usually payroll, but I'm just saying like say $750 was deducted. Whoa, what just happened? Okay, now suddenly there's a balance payable. Okay, now let's investigate what's happening. So let's go to sum. This is the summary. Okay, the person made 25,000, student made $25,000 of income. The student has to pay $1,294 of federal tax and $300 of provincial tax. Okay, so total payable by the student is 1,594. But in the T4, there was only $750 that was deducted. So at the year end, the student unfortunately still has to pay $844. But now wait, we also removed the T2202 amount, the tuition fee amount. The tuition fee amount is here in T2202. Keep an eye on the federal tax amount. It's 1294. Okay. When I go into the T2202, now let's see what's going to happen. I add back the fees, 10,000. Keep an eye on the refund. Whoa, from a $844 payable, it's gone to a $450 refund. How is that? Okay. Remember the federal tax portion? You see, that's zeroed out. So what's happened is there was about, I think, $1,294 worth of federal tax payable. But what's happened is because your fees are in effect, $10,000 times 15%. So $1,500 is the maximum that you can claim as your federal tax credit. And you had a 1294 amount. So you still have $206 worth of federal tax that you can offset in the next year that you're going to make money. So right now what has happened is, let's go to the sum document. So even if you have $25,000 of income, your federal taxes has been zeroed out. And this is because of your tuition credits. Your tuition credits has completely zeroed out your federal taxes payable, and you just have a $300 provincial tax payable, out of which $750 you have already paid. So the net you will get back as a refund because you have paid more and you just owe 300 of provincial taxes. You're going to get back the balance as a refund of $450. Now, then other way to check this is also go to your Schedule 11. This your accountant should be able to give you. So say you have $10,000, like this is at which you started. Right now you're not going to use the whole amount. You're going to use only 8,632. And guess what? The 8,632 times 15 will be the 1,294. Yeah, that's exactly it. So 8,632 times 15 is 1,294. So it's just the 15% that you've got back in form of federal taxes. And the balance of 1,368, this should be the 15% of this should be $206. So let's just validate. 1,368 times 15%. Yeah, that's the 205, $206. So next year, when you kind of make income, the $206 will be kind of minused from whatever federal tax you have to pay. So yeah, the important concept over here is in order to get your tuition fee back as a credit or as a refund, your federal tuition, you should have a tax payable. So just because you've paid fees, it doesn't mean anything. You have to have income and you have to have a federal tax payable. That's when you get 15% of it back. Say, let's go back to the old scenario where the student was making really less income, the T4. Okay, let's say the person was making only $15,000 of income. Okay, what's happening now? Up to $15,000 anyways, there's no tax. The $750 that was deducted, the student is getting the entire amount back. But now let's also check the tuition credits. So let's go to Schedule 11. Check this. You started at 10,000. Let's go to page 2 and see how much at the end are you. Oh, wow. So you're going to get the entire 10,000 to be carry forwarded in the next year. So don't worry if you don't have income this year, you can carry this $10,000, and this is not $10,000 exactly. This is $10,000 times 15%. So the $1,500 of federal tax you're going to save in the next year. Now, say in year 2, you've added, you've paid more tuition fee, you've paid another $10,000 extra. That will also show up over here. It will show up in your current, current tuition fee. So it will get added to your current tuition. So your current tuition will get added to the amount that was carried over. So say, uh, as is, now we are carrying this forward to next year. So say you have $10,000, and in the second year you've paid $15,000. So your total tuition fee at the end will be $25,000, which you can use in year 2. So if you do 15% of this, you'll get about 3,750 as a reduction in your federal taxes. I hope this was clear, because a lot of students, they don't have income in their first year. They just pay the fee and they feel that, okay, we should get a big amount of refund back. No, you will not get a refund back. You have to have income, and that is proper, high income, I would say above $15,000, so that you can see the impact of your tuition credits. Okay. The next two concepts are related to periodicity, or the accounting concept. And I've always got this question wherein I've paid $10,000 of fee, but my T2202 is showing only 5,000, or the total of my fees don't match with the T2202. So, okay, this is very simple, and I'll also show you why this happens. So let's go to this example. Okay, just make this slightly bigger. Okay, say a student, let's take this example. A student landed in October 2023. They paid fees for 8 months for 2 semesters. They paid $10,000, and they paid fees from August to April. Now, in Canada, your accounting year is from January to December. So whatever we are doing is only for Jan to December. So how many months do we have from Jan to December as of 2023? So it's September, October, November, December. So just 4 months. So what's happening here is from September to December, it's $10,000 multiplied by 4 months divided by 8 months of the total. So it's just 50% of $5,000 that you're going to see in 2023. Now, year 2, the student wants to do another course. They start paying their fees in 2024. They pay 15,000 for 8 months until December 2024. Now, what's going to happen is, in the T2202 that will be issued, they are going to get January to April of last year. So it's going to be 4 months of $10,000, which is $5,000, plus $15,000 of the full year. So you see this for 2024, they're actually getting $20,000. And for 2023, they're just getting $5,000. But if you look at it overall, in both the cases, it's still the same. It's just that because this is split across 2 years, 2 financial years, you're getting part of it in this year and part of it in the other year. So make sure when you look at your T2202, have your fee receipts in hand, and make sure at the end of all of your fees paid, your total of your T2202s match up with the fees paid. So that's on you, and you have to make sure that you have done your due diligence, because say for example, if you missed a slip, or if the number is not matching, guess what? You're losing this times 15%. You're losing about $3,750 that of tax that you can save. So yeah, make sure that all of your slips, your T2202s match with the actual fee receipts of what you've paid. Another thing is, say I paid $5,000 of fees, but I don't have a T2202, or my college is not giving me a T2202. So this I see a lot with people in the January intake. Usually they come in December, they pay the fees in December, but their college is starting in January. So for that year, they're going to have zero fees. So it makes sense. So always make sure that you understand that it's not based on the payment date, it's actually based on the date when your college starts. Because in Canada, they ask you for your fees in advance, but that doesn't mean that just because you've paid the whole fees, it relates to that particular year. So you have to understand that the calendar year is from January to December, and your expenses have to be for that period. If you have it for that period, then yes, like in this case, in example 2, because the whole expense from 2024 to December 2024 is in the year 2024, you're going to get the T2202, you're going to get the full $15,000 in that year. But because the $10,000 year is spread among two different years, you're going to get part of it in 2023 and you're going to get part of it in 2024. The only important thing is to make sure that the 25,000 match at the end of the student's life, yeah, make sure that the fees and the T2202 match. Okay, this is also another amazing concept, and a lot of students fall into the trap of not checking their pay slips, and they have to suffer at the end of it. But okay, I'll try to make this as simple and as easy as possible, because I've got this case. I see this almost every tax season, at least 10 to 15 cases easy that keeps happening, and all of them are just puzzled. But there's no need to be puzzled. It's a simple concept. If you understand, it's with the example, it'll be like super easy. So let's say what happened is, me and my friend both earned 30,000, but I have a tax owing. And why? All right. Now, let's say you are doing three jobs. You earn 30,500. Your friend is just doing one job. Your friend earned 30,500. As we went to the basic personal credits explanation, it says that up to $15,000, there is no tax. Okay. Now, what's happened is, you remember at the time of joining a new job, you're always asked to fill out this form. If you're seeing this form for the first time, I think a lot of people don't know what this means, or they just fill it out because, yeah, because you're just asked to fill out. You don't really read about what this form means. And I think even HR doesn't explain it to you. But I'll try and explain, in very, very simple terms, what does this mean. So this is by the Ontario government. This is, the provincial credits portion of it. And this amount over here, 12,399, it means that you're telling the employer that, hey, up to 12,399, please don't deduct any taxes. I mean, provincial taxes. Same concept for federal. So this is for basic personal taxes. This is your federal amount, $15,000. So the basic personal amount over here says 15,000. And if you look at it at the end, it says 15,000. What does this mean again? That up to $15,000, you're telling the employer that, hey, please don't deduct any taxes, because you know what? I am a low income earner, and um, because anyways, I am kind of below the threshold, like there's no point of deducting my taxes, which makes sense. This makes sense if you are a low income earner and you really have no, you do not have any income, which is okay. But now where the complication lies is, you're doing three different jobs. Okay. Now what happens is, you claim this basic personal exemption limit at each of the jobs. So job one, job two, job three. What has happened is, you have claimed this exemption thrice, and because of this, what's happened is, you're not paying any taxes anywhere. You see, you're earning 7,500, 6,000, and you think that, yeah, because I'm less than 15,000, I don't have to pay tax. Okay, fine. Yeah, fine. That's only if you're doing one job. But now, because you're doing three jobs, what the CRA does is at the end of the year, they take a total of all your incomes. And based on their calculation, which your friend, let's say, is doing one job, is earning the same amount of as you, he can just claim the $15,000 once. So what's happened is because you've claimed it thrice, you're not really paying any taxes on job two and job three. The only amount of taxes you're paying right now is 17,000 minus 15,000. That is the $2,000. You're just paying $401. And your friend in itself, he has paid about $3,000. So you see, because of claiming this exemption at multiple jobs, you actually paid less tax. At the end of the year, what's going to happen? If I minus the 3,107 by the $400, guess what? This is the amount that you have to owe the CRA. And a lot of students get really, really shocked to see that they owe the CRA, but they don't realize that at the start of the year, they have never paid taxes, whereas your friend has always been paying taxes. And students don't even check their payroll, they don't even check their pay stubs. So I would strongly suggest that wherever you're doing your job, understand your marginal taxes first and make sure that there is tax that is being deducted. We can also go through this with a live software with examples. So let me quickly zero, let's assume that there is no tuition fee credit, to just keep it simple and make you understand of the impact of doing multiple jobs. So say this place we're doing 17,000. Keep an eye on the left as the numbers change. What's the income tax deducted? It's 401. Let me go to job 2. So this is a T4 job 2. Let's put in the employment income. It's 7,500. Okay, let me do it the same thing for job 3. How much is this? $6,000. So 6,000. Okay, let's see what's happening. Okay, you see on the $30,500 of income, I owe $2,084. That is after only $401 of tax being deducted. So you see there's already a tax owing of 2084. So this amount, again, like there are a lot of other calculations, but this amount is the 2084. It's just to highlight a point that because you're claiming this exemption at multiple places, your employer at job 2 and job 3, you see income tax deducted is 0. Job 2 is again 0, or it's really less. And if I go to your marginal tax rate, if I go to your summary and check your marginal tax rate, yeah, you have to pay taxes at 20%. So the moment you see a T4 with 0 tax deducted, that means, yeah, something is wrong. So on 7,500, if I do 20%, 7,500 times 20%, about 1,500. There should be 1,500 over here. The moment you see that there is no income tax deducted, something is definitely wrong. And the reason is this: you have claimed this 15,000 in all the three jobs. And my suggestion would be to go and tell HR that, hey, I don't want to claim this. But okay, I'll give you another perspective at the end of all of this, my 2 cents. But yeah, this is the reason if you're worried about having a tax owing at the end, is you're claiming this 15,000 everywhere. Also, if you read it at the bottom, you see if it says you have more than one employer at the same time, you need to click this box. And the moment you click this box, you should select this as 0, and you should go in and put this as 0. Same over here in Ontario. The moment you see that you're doing multiple jobs, just, yeah, I've already checked this off. Say you have more than one employer at the same time and you've already claimed the personal tax credits on an other form, you cannot claim them again. It says this, you cannot claim them again. So because you're claiming them at the other job, just hit 0. Like, try and you know, make this 0. Let me make this 0. Yeah. Okay, this is hard coded, but my final claim amount over here at the bottom, it should be 0. So even if this says, like, let's say this says 15,000 over here and this was hard coded, my final number at the bottom, this should say 0. That means I'm not claiming this if I'm doing multiple jobs. I'm just claiming this at my first job, which is okay, but I cannot be claiming this at 3 different places. Otherwise, you see what happens at the year end, you have like quite a bit of taxes payable. And a lot of students go through this, and I say, please, please, please check your pay slips from day one that tax has been deducted. If not, please reach out to HR and change the TD1 form. Another final thing that I would like to add is getting a refund awesome? So an alternative thought process to this is, you know what? A refund is not free money. If you really want to get a refund, you have to actually spend a lot of money to get a very, very less amount of refund. Like you see, you end up paying like so much of tuition fee. You pay like 20, 30,000 of tuition fee, and what do you get in return? Like just 15%. That's not a lot. Okay, it does help, but you have to wait for a full year to really get that. And you have to wait for you to actually earn income so that you get the refund. So, in my opinion, it is not free money. It's actually your own money, okay, that the CRA is actually using for 1 full year, which means what? They're taking the money, they're lending it to someone, or they're investing it somewhere, they're getting interest, and at the end of the year, they're giving it to you without any interest. So based on time value of money, you are actually losing interest cost by getting a refund at the end, because what's happening? You're paying the CRA an excess amount. The CRA is using that money for the full year. They're chilling on it, and you are getting just the same amount. You're not getting any interest, nothing. So, in order to really get a refund, you need to spend a lot of money. Like the top 3 or 4 major reasons is, one is tuition, one is medical, one is investments, if you have moving, etc. And you get a real small fraction back. So my view of looking at this is, you know what? I would actually take more money right now in hand. I would invest that money in a TFSA. Again, I'm not giving you any investment advice. This is just my 2 cents, what I would have done. And because the money in a TFSA is tax free, you can actually reduce your cost by the interest money that you earn in the TFSA. So say, let's take the same example back. I know that at the end of the year, say I can project that, okay, I'm making around 30,500, and roughly I have to pay the CRA around 3,100. And each month I'm already getting like a higher payout because there are lesser taxes deducted. What I will do is I will take out 20%. Like I know my marginal tax rate, right? Like I need to know my marginal tax rate before, or just to be safe, like here, this is only after you file your taxes, you can get to know your marginal taxes. But again, you can go to my previous video where I've already spoken about marginal taxes. You can go and see how much money you're making. And say, usually people in Ontario, if they're less than 100,000, they are around in the 30,000 bracket, 30% tax bracket. So what I would do is I would just take 30% aside. Like say I would take 30% of this, of all the three, basically, just, times 30%. I would just take this money at the side and invest it. Like just to be, this is a very, very hypothetical example. In this case, this amount is really high, but let's just use 20% to reduce the amount. 20%, I take the 6,100, like, you know, uh, from every paycheck, and I kind of invest it at, let's say, the GIC. Let's do a very, very simple GIC at 5%. At the end, I'm getting $300 extra. I'm getting $300 extra. And say, even if I have a $2,700 payable, okay, what am I doing? I'm paying off whatever I've saved So it's 6,400 minus this. So I'm still left with about $3,000 in my savings. So I'm building savings, I'm getting interest, I'm not getting taxed, and I'm still paying the CRA. Whereas in this case, if I would have not invested the money, I would have just got like, I would have got maybe nothing at the end because this is the amount that I anyways have to pay the CRA. So what I feel is like if you know that you have a tax payable at the year end, you can actually start budgeting for it like 1 year in advance, plan for it, invest the money, get interest, and reduce your cost. And just to make this, like apples to apples, like just to make a fair comparison, like let me just do 2706 is the extra amount that I have to pay, and I invested this in a GIC of 1 year in a TFSA account. So I actually ended up earning $135 tax free, and I had to pay the CRA like the $135 less. So if I kind of start taking out the $2,700 at the start of the year, I invested, I get about 2,800, and I can use the $135 with me for tax-free purposes. So again, this is a bit in depth, but I'm not giving out investment advice. This is just my perspective. If I know that I have a tax payable, I can just plan for it, rather than waiting for the CRA to send me a notice. I know how much I'm making. I can kind of get a rough estimate of how much tax is going to be payable at the year end, and accordingly, I will plan. But now, if you are in an hourly job where you don't really know how many hours you are getting, then I think, yeah, it's not really feasible. The only better option for you is just go back to your HR and change this $15,000 to zero and the provincial amount also to zero if you don't want a tax payable at the year end. So again, it depends on perspective, it depends on people, but that's the beauty of finance and taxes. It's very personal, it's very subjective, and there's no right or wrong. So I hope this video has given you a lot of context on how tuition fees work. It's not just, you get the full amount back. And I hope I was able to clarify a lot of, misconceptions that are spread in among the students. And yeah, if you have any questions, I'm an email ID away. My email ID is at the bottom of the video. You can just send me an email ID. And yeah, if you're an existing client, just send me a text. So thank you. Have a nice day. Have a nice rest of the day. Bye.